Today I want to talk to you about selling covered calls. Hey everybody, welcome back to Drawbridge Finance. My name is Levi Woods. I'm not a financial advisor. I don't work in the finance industry. This is an opinion channel about money. I definitely am not offering financial advice, but I do like to play in the stock market and I like to make money every single month by investing in the stock market. Yesterday I was having a chat with one of my coworkers about investing in Starbucks, and now he invests in Starbucks, so do I, in a roundabout way. I mean, I option trade Starbucks. He actually owns shares, and we talked about the share split that happened a couple years ago and how Starbucks has been an amazing investment for him, and it's been quite a good investment for me as well. And it's interesting because we have two different perspectives on how to invest in that stock, and he's like a long-term buy and hold investor, and I have been trading the options on it. So I asked him yesterday about what happens if you sold a covered call. I mean, I could make a video on if you're in a position where you've got a fairly major investment on some stocks and the stock price is rising and rising and rising. Is it a good time to possibly protect yourself by selling that covered call? Taking a strike price above its current price and looking at the statistics of it and saying, well, what are the odds with the movement that the stock is currently having that the stock is going to continue to rise like this, or is it going to fall? And if it is going to fall, is there an opportunity to make some money off of that? And I like to think that stocks are more cyclical than they are linear. So of course, when we look at those cycles, you can see if a stock is up, then it's likely going to go down before it goes up again, even on something like Starbucks, which has been a growth stock for many, many years. Anyway, so I thought we would just take a look at the chart really, really quickly. Let's just go over to Yahoo Finance, pull up Starbucks. It's trading this morning at 73.10, and we can see we've got a dividend of 1.9%. Now, this is why I'm not a shareholder in this. At 1.99%, that's not a big enough dividend yield for me. I'm a dividend investor. But the options, today's about options. I just want to look at those. So I'm going to go to the options tab. I don't know why Yahoo Finance chooses to show this in a list. Most people look at options charts in straddle view. So I'm just going to click on straddle, and then I'm going to change the date. And as an option trader, I like to go about 6 weeks out. So I'm looking at the monthly expiration of May 17th. So I'm going to click on that. We're going to pull up the chart, and the current price is around $73. So we're looking at the strike price here in the center, and we're going to be looking at the call side of the chart. So this is the call side, this is the put side, because this is a video about selling covered calls. So this would be when you own the shares and then you sell a call against them. You're basically making a contract with somebody that says, I'm willing to sell you these shares on or before May 17th for $80. I mean, pretty good deal for a stock that's trading at $73. If somebody wants to buy it for $80, obviously they would want to buy it when the stock was worth more than that. So how much money can we make by selling this contract, by selling this agreement? And for this $80 strike price, we can see that we can collect 30 cents. Now every option is calculated at 100 shares per option. So 30 cents times 100 is $30. So of course I've built a spreadsheet because that's what I like to do on this channel, is build spreadsheets. So let's look at the value. The stock value right now is 73.11. That's what we last saw. So let's just change that. So if we look at the current stock value, we're going to compare Alice and Bob. So Alice is basically going to say, let's buy the stock today at today's price, and how much money would we make if the stock went up in the future? Just to set it up, these are a number of option contracts. So this would be 2 option contracts or 200 shares. So the current stock value at $73 to buy 200 shares would cost about $14,622. 400 shares would be a $29,000 investment. Right up to, I went really high here. I went to 10 contracts, so 1,000 shares. If somebody was to hold 1,000 shares in their account, they'd have approximate investment, today's value of 73,000 American. Let's just quickly look at what would happen. What happens if the future price on May 17th is $65? Well, if we bought it today at $73 and it's in the future it's worth $65, the 73,000 would be worth 65,000. So you'd have an $8,000 loss. And if it was worth $73, it would be worth $73,000 if you had 1,000 shares. I'm going to primarily look at this just because the numbers are easy when we look at a 10 contracts. $73 value, $73,000 investment. This is pretty straightforward. If it goes up to $80, then it's worth 80,000. 82, it's worth 82,000. I hope you guys are following along on this. Now let's look at Bob. He does the exact same thing. These original investments, he's going to buy the shares. So he's either buying 200 shares for 14,622, 400 shares, 600 shares, 800 shares, or 1,000 shares. And again, I'll concentrate on this 1,000 share column. And then he's going to choose to sell the covered call against that. So we're going to look at this and say he's going to sell the 80 call. Now the reason I did this, I actually looked it up on my brokerage, and I know that this has a 17 delta this morning. Now deltas change, but delta inversely tells us what the percentage likelihood of this trade being above that strike price is. So at a 17 delta, we know we have a 17% chance that the Starbucks will be trading above $80 on May 17th. Of this year, 51 days from now. Now, it's not available here on Yahoo Finance. I have to look at this on my brokerage, but I can look at the delta. So I know that the delta on the 77.50 strike is around 27 delta, and the 80 is around 17 delta. Now, I like to trade around the 16 delta all the time. That's my go-to. So I'm looking 6 weeks out for a 16 delta. So when I look at this particular stock for Starbucks, it's trading around 30 cents. Now, to me, that's not really enough premium. I typically look for a premium that's around 1% of the stock price. So 1% of $73 would be 73 cents. And so this is sitting at only 30 cents. It's actually quite low value amount of premium. But I'm going to run this scenario anyways, just to see how the numbers work out. So let's plug in 30-cent sell of the covered call. The amount of money that we're going to collect would be, when we sell 2, would be 30 cents times 200, which would be about $60. But then you have to subtract the commissions. So I'm using a pretty generic commission structure, $9.95 per trade plus $1.25 commission per contract. To trade 2 contracts would cost about $12.45 from the $60. So the profit would be $47. The profit from selling 4 contracts, $105. So on and so forth. So again, looking at this 10 column, we'd have $22 in commissions subtracted from the $300 collected for selling the call, and we would be left with a maximum profit of $277. Now let's look at that chart, and you can see I've highlighted in green which cells make more money. So when you're comparing Alice's chart to Bob's chart, it's like, well, what happens if the price of the Starbucks shares in the future are $65? Alice's investment, just having the shares, she would have $65,000, and Bob would have $65,277. So he would have $277 more in his pocket. This is true for everything up until that $80 mark. Once we hit that $80 mark, all of a sudden Alice is the better investment. The price of the stock is worth $81. Bob has made an agreement to sell it for $80. He's going to sell the shares for $80 times 1,000 and collect his $80,000. He still made a ton of money. He invested $73,000 and he sold it for $80,000 in 51 days. I mean, it's like a $7,000 return in 50 days. Massive from today till then. And the risk that he's taking is capping that out. So he's saying the maximum I can make is that $7,000. I'm never going to be able to sell this for more than $80,237. That's the max. Alice, on the other hand, could actually make more money if she sold these shares if they were trading at $81, $82, and $83. So that's the thing that we're weighing. It's like, well, you're making a little bit more money. You're actually reducing your risk because you have this extra $277 in income. So if we do that, that's like an extra $200 a month. I mean, for shares that you own. And again, the percentage likelihood is that it's only 17% chance that it's going to be above this $80 strike price anyways. So let's take a look at an actual chart. Let's go to a 1-year chart, and you can see I've got my usual things on here, my 20-day, 50-day, 200-day moving average, and then I've drawn some lines on here. So I've drawn this line, which is showing the peaks and the valleys to kind of show the range that Starbucks is trading in. So then we can kind of move forward and say, is Starbucks, if it continues in this trading range, is it going to, on May 17th, be at $80? Well, $80 is way up here. It's this line right up here, way outside of the range that it's trading in now. And if we look at the cycle, because we know stocks are cyclical, we can see that the stock is going up right now. It's way more likely to actually downtrend in the future here than actually continue to break out of this trading range. Let's look at the 5-year chart just to see what this has done. I mean, if we look back, this is the share split. If we talk about like what kind of investment we could have made at that share split, right around when the share split is right when I started trading options on this stock, and you can see pretty clearly that this stock has actually been flatlining for most of that time. It's actually had this run up in the last little bit. So to keep with its 200-day moving average, it's actually got to come down quite a lot to get back to its normal range. So I made a little chart about this. Like, what if we looked at April 9th when it share split? The stock price was $46.92. The current price today, $73.11. The dividends paid since then have been $4.10, because we always calculate what dividends we're getting paid. So if we bought 1,000 shares or 10 contracts, original investment value of $46,000 is returned today $73,000. We've collected $4,000 in dividends, and we've got a total profit. If we sold today, after holding for 4 years, we have around a $30,000 profit. This has been incredibly good. It's around 13% per annum, and the profit per day since that investment has been around $20. I always like to calculate out what we make per day because it makes it easier to compare, like dollars for dollars. When we look at selling this additional income and knowing from this chart that we're going to make approximately $277, that $277 over the next 51 days is going to work out to an additional $5 per day. On a stock that we're typically making $20 a day as a shareholder, we could bump up our earnings by $5 a day and decrease our risk. I mean, it seems kind of like a no-brainer. I mean, I would like to see a little bit more premium than 30 cents in this particular one. It'd be nice if we were collecting 60 cents on this trade, but Starbucks is not overly volatile. So the big takeaway from this is that if we sell this covered call and we make this $277 today, we're limiting our potential profit if the stock goes way, way up. If that happens, I mean, the chart is not indicating that it's going to do that. So we definitely are capping our upside, but we're creating an additional around $200 in monthly income. And that's what I'm about, creating monthly income every single month so I can retire and live the life that I want. Anyways, that's the video for today. I know that was a big one because option trading can be a little bit daunting for those of you who aren't into it, but hopefully that gives you a little bit of insight. Please ask any questions that you have down below or send me a message. I would love it if you guys just left a comment down below because that's the easiest way for me to see that, and then I can respond publicly. And let's all get rich together. Thanks so much for watching.